Welcome to The Explainer. Today, we're diving into the pretty wild world of AI trading. Where these complex algorithms promise to make a fortune and technology is supposed to conquer the complete chaos of the market. But really, how much of this is a game changer and how much is just, well, hype? Let's get into it.
So you've definitely seen the ads online, right? The promise of this AI trading bot that just prints money while you're asleep. You wake up richer than when you went to bed, all thanks to some magic software. It's this super powerful, really appealing idea that's built a huge industry around it. But like most things that seem a little too good to be true, there's always a catch. And that kind of slams us right back to reality. Professional trader Fabio Valentini puts it bluntly. The number of people who've been burned by these promises, the disillusioned crowd, is way, way bigger than the number of new people coming in. This isn't just some small issue. It's a huge problem built on a fundamental misunderstanding of what it actually takes to win at this game.
Okay, so before we can even talk about how AI is supposed to be the solution, we've got to understand the real problem, and that's us, the human element. See, trading isn't just about looking at charts and crunching numbers. It's a total psychological battlefield. Fabio's experience from the world's top trading competitions shows you exactly what this feels like. The pressure is just insane. You make a 5% gain one day and you're a hero, but you lose 7% the next. Suddenly, everyone's on your case. That emotional roller coaster is what pushes so many traders into making bad, fear-driven decisions. And the numbers, well, they don't lie. Something like 90%, a staggering 90% of retail traders end up losing money. And it's not just bad luck. It's about a lack of discipline, not having a process you can repeat, and just not being able to handle that intense psychological pressure. This is the human flaw that technology is trying to fix.
For decades, the best answer we had was algorithmic trading. But now, a much more powerful tool has stepped onto the field: artificial intelligence. So let's break down why this is such a big deal.
So on the surface, the difference seems pretty simple. Traditional algorithmic trading, we'll just call it algo trading, works on a fixed set of rules. It's basically, if this specific thing happens, then do that. But AI trading, that's a whole different beast. It's dynamic. It actually learns from data and changes its own strategy over time. And when you really get into the weeds, the difference is huge. Old school algos are rigid, right? If the market shifts, a human has to go in and manually recalibrate them. But AI, it's adaptive. It's using machine learning to evolve on the fly. Algos are stuck looking at basic stuff like price and volume. AI, though, can analyze a massive amount of data. We're talking news, financial reports, even the mood on social media to get a way richer, fuller picture of what's happening. It's a fundamental upgrade.
So how in the world does an AI actually do all that? What's really going on inside that black box everyone talks about? Let's peek under the hood at a couple of its core technologies.
First, you've got natural language processing, or NLP. This is basically the AI's ability to read and understand our language. It can scan thousands of news articles, analyst reports, social media posts, you name it, in the blink of an eye and figure out the overall market sentiment. It might see negative chatter growing around a company and signal a sell order before a human trader has even finished their morning coffee.
And then there's reinforcement learning. This is so cool. Imagine an AI playing a video game, but the game is the stock market. It learns by doing, trial and error. It gets a reward for a good trade and a penalty for a bad one. It does this over and over, through millions of simulated trades, essentially teaching itself the absolute best way to execute an order to cut costs and boost returns. That's something a static, rule-based system could never do.
All of this comes together in something called the alpha pipeline. Think of it as the AI's daily workflow. First, it just sucks in tons of different kinds of data. Then, its machine learning models chew on all that data to generate a trading signal, a buy or a sell. And finally, it passes that signal to an execution agent, probably that reinforcement learning bot we just talked about, to place the trade in the smartest way possible.
Okay, so AI is obviously incredibly powerful. We get it. But, and this is a big but, it is not a magic money printing machine. And this brings us to a much-needed reality check, where we have to separate what's real from the very dangerous pitfalls and all that marketing hype.
I mean, it's the million-dollar question, isn't it? If this tech is so amazing, why aren't we all just turning on our bots and planning our retirement? Well, the answer is in a handful of common and usually very expensive mistakes.
The number one trap is something called overfitting. This is where a model is trained so perfectly on past data that it looks like a genius in tests,
But then it completely falls apart in the real, live market because the future is never exactly like the past. Then you've got people who just ignore transaction costs, fees and slippage, which can eat up 30 to 50% of your profits. And finally, there's the black box problem. If the AI is so complicated that you have no idea why it's making a decision, you have no way to fix it when it starts going wrong. And trust me, it will go wrong.
This quote from Fabio just nails the data dilemma. It's true, past performance doesn't guarantee future results. We all know that. But his point is so important. Trying to trade without good data and serious backtesting is pretty much a guarantee for failure. You have to have some kind of historical evidence that your idea actually works.
And this is exactly the game that deceptive marketers play. The people selling these retail bots, they prey on this stuff. They'll show you these amazing profit charts, but they'll conveniently forget to show you the massive drawdowns, the huge drops in your money that it took to get those profits. They cherry-pick the absolute best results to sell you a dream that has almost nothing to do with the disciplined, hard reality of professional trading.
So, after all that, where does that leave us? Is AI just another toy for the big Wall Street firms, too dangerous for the rest of us? Not really. The future, it seems, isn't man versus machine. It's man with machine.
And here is the most important thing to remember. AI is not an oracle. It cannot predict the future. The best way to think about it is as a co-pilot. It does all the heavy lifting, processing insane amounts of data, spotting patterns, managing the nitty-gritty of execution, and that frees up the human trader to do what we do best, focus on the big picture, strategy, managing risk, and making that final call. And you can actually see the results of this partnership. When you compare old-school strategies to new AI-driven systems, the performance boost is massive. We're talking higher returns, and maybe more importantly, much lower drawdowns, which means smaller losses when things get rough. You also see Sharpe ratios that often double. Now, the Sharpe ratio is just a fancy way of measuring how much return you get for the risk you're taking. So, simply put, AI makes the human trader's edge much, much sharper. So how does a pro actually use this power? They follow a very strict process. It starts with months, literally months, of study and data analysis to build a real statistical edge. Then they test that edge like crazy in a simulated live market. And only when it's proven itself there do they even think about trading with a small, personal account, slowly building up from there. There are no shortcuts. It's all about discipline. Which really brings us to our final thought. A machine can give you more data and analysis than any human could ever dream of. It can find patterns we would never see, and it can execute trades with perfect emotionalist discipline. But can it give you an edge? That unique personal advantage that sets you apart? It seems like that still has to come from us, from the human creativity, the discipline, and the intuition it takes to build the system in the first place. The AI is an amazing tool, but you are still the craftsman.